Polkadot is not slowing down. A new high has been made, but are we still due a correction? Well, it's time to reevaluate. The other day we did a video, we're going to look at it and then go, right, what should we do next? So that's what we're going to cover in today's video. So if you like today's content, like, subscribe, hit the bell notification. If you don't know me by now, I'm Jagir, the award-winning author of The Extraordinary New Venture Capital Opportunity, How to Invest Like a Pro. Been trading currencies for 15 years, featured in the best-selling book, High Probability Trading Strategies, back in 2008. And now I focus on crypto. So we posted a video, I think it was just yesterday, literally a few hours after I posted the video, Polkadot made a new high. It made a new high. So what we was looking at was actually, let's just jump into theory. The theory is this, right? Theory is of Elliot wave. There's Elliot wave. We use Elliot wave and Fibonacci to measure the market psychology. And it's this part that I want to focus on. So Polkadot looks like to be forming textbook. We had this nice move up. I'm going to cover that in a bit more detail in a second. And then a nice move down. And then we've got this new movement happening. But now we're going to focus on a micro picture. What we was assuming with Polkadot is we was at this phase of the market and we should anticipate this wave down, this wave C. But because this wave B made a new high, actually is no longer a wave B. There are such things as complex corrections and different types of corrections, but it's more likely that we're still in this range and we're going to be in this range of the market. So we should still anticipate a correction. And I'm going to tell you why. Again, remembering that there's no guarantees when it comes to the game that we're playing. It's all probabilities. So it's okay for the market not to unfold as you anticipate. And that's why we have proper risk management strategies. So looking at this chart, we said here, so let's just dive into the live chart. I've backtracked the data to when I did the video yesterday. So I did the video literally here. Let's just grab this here. Boom, boom. We did the video here. And we said, look, the market looks like it's done this amazing move to the upside. We're due this correction, A, B, C. That's what we're looking for. Because Polkadot has just been amazing with this part here. Correction. And again, we're looking at an hourly chart. So what we was anticipating was move down, move up, and then a wave C. Right? That's what we was anticipating. That was the opinion of the market. But the price ultimately tells you what the price is, right? There's no changing that. And we're always forecasting ahead of time with leading indicators. So now let's just get an update. What did Polkadot do and what do we do about it? Like, do we just, what do we do about it? What do the pros do about it? So remember, we had a question mark here. That's why we keep a question mark here, because for this to be a wave one high, this high needs to be held. But what happened yesterday, right? If we just unfold the data, this does this for me. Oh, here we go. Let's see if I've got this feature over here. Let's see if it plays for me. Right, I'm just gonna close this. You can tell I've got a technical glitch. TradingView's not liking me right now. Let me just refresh this page. Let me see if that reloads this. Let's see what that does. It might be my Wi-Fi. Let me, oh, here we go. Yeah, chart remains. All right, the show must go on, right? Technical glitches. Let's see what's happening here. Been having a terrible time on my Wi-Fi. Let me connect to my Android. We're going to tether. Let's tether. Let's see if that does it. So what we're doing here is we're reevaluating the market. Where if something gets invalidated when it comes to Elliott wave terms, hey, look, we don't need to get precious about it. We just reevaluate and say, okay, it doesn't seem to be what we thought it was. Let's reevaluate. So this is where we were. Yep, perfect. Let's just now jump back into this chart here. Yep, so this is what we were doing just a second ago. Let me just delete all this. We'll keep it live. We'll keep the show rolling. These are all the lines that we drew the other day. Let's just clean this up. Let's just clean this up. Boom, 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 boom. Right. Actually, let's do a quick recap. So this is Polkadot. We had this amazing move up, amazing move down. and then more recently a move up, and then we're anticipating some type of correction. So we're jumping into the hourly chart to see what does this look like. So what I'm going to do here is I'm going to zoom back in right over here. And what we said yesterday was if this wave one holds this top, then it's likely to wave one. But you can see clearly it's exceeded. So we have to just step back again and go, let's just reevaluate. Let's look at this objectively and not get too emotional about this. So now, initially we thought it was an ABC. Now that we've got our Wi-Fi back, we thought it was this A, B, C. And anticipating a correction here, but it's blasted through this new high. So now we've got to reevaluate and say, okay, actually the daily momentum is still bullish. So actually we're probably going to see a new high. So now I'm going to show you how we reevaluate the market. And then we're going to also look at what is a good trade strategy if you're looking to buy Polkadot for the first time, right? High probability. I'm going to cover two main things with you so you can increase the chance of winning. So now let's just do a couple of things first. The first thing we need to do is reevaluate the Elliot wave count. So this wave A doesn't look like a wave A no more, so we delete that. This wave one doesn't look like a wave one no more. It's going to be more likely to be up here. Now what we want to do is go, okay, now that we've got more information, it actually looks like this is more of a wave 5 coming up here. This looks like a wave 3. This is the wave 4. We can delete this info and we're just going to reevaluate. Sorry, this is a wave 4 here. Wave 4. And what we're looking at now, a potential, is this is the nature of the markets, my friends. This is the nature of the markets. And I think most people find it difficult with Elliot wave because they want to be right. But it's not about being right. It's about getting an edge on the market and then looking at it with high probability. Looks like a wave 1, now a wave 2. And we're saying this because we've broken this new high. It looks like a classic wave 3. We'll probably get a bit of a pullback, a retest of this, and then we'll end up with a wave 5, something like this. So that's what we're going to look at today. Let's just delete this. I find it funny when people get very precious about technical analysis, and I can understand why. No one wants to be wrong, so to speak, and we need to be right to make money. But actually, you can make money even when you're wrong, and I'm going to show you some of those strategies today. So now we've got this chart pattern, right? I'm hoping this is becoming clear to you. 1, 2, 3, 4, 5. So we've reevaluated. We've changed our opinion of the market, not because we're unstable human beings, is because we've got new price information. This new high, this high did not hold. You can clearly see that it got broken. It got broken right here, right? But that's okay. We just need to reevaluate. So what's likely to occur now is the wave 5 high up here, because we need to take into account top left-hand corner, weekly momentum is still bearish, even though it looks like it's kind of playing around over here. We've got the daily momentum over here. It's still bullish. I drew these lines yesterday saying we're waiting for the next bearish reversal. And if that high hadn't got taken out and we made a bearish reversal, then it'll be a different story. But right now, if we just zoom in right over here, we can go, it's probably going to take another 2 days, 2-3 days for it to get a bearish reversal, which is probably going to coincide with the next high. And then we should probably anticipate the correction that we're still anticipating from before. So let's just jump back into this hourly chart. Still pretty clean. Like, look at this. I want to make sure this is clear. We've got this wave 1, wave 2, wave 3, wave 4. Now we're going to focus on what is the likely price target for an end of wave 5 before we are probably still going to get a correction. If you like it or not, you know, there's no guarantees in this game, but that's just the probability. So now let's just do some Fibonacci price for a new wave high that we want to be very, very aware of. Now that we've got a bit more price information. The first one is going to be price extension. So we're going to measure wave 1 to 3. Measure it from the low of wave 4. The two numbers that we really want to be aware of is 62.8 and 100%. So we know we've got this range. Let's just put it up here for now. Then we want to also measure this wave 1. Because wave 1 and wave 5 have a direct relationship. And the two key numbers projected from the bottom of wave 4 is 100%, which is 1.618, and 100. So now we've got these two targets, here and here. And the last one we're going to do is an external retracement. We're just going to measure this wave 4, low, high to the low. But the two key numbers that we want for an end of wave 5 is 1.272. By the way, I covered this in the free Elliot Wave Fibonacci Masterclass, because this just gives you a good context. And you can see even the higher one is here. So this is saying this is going to be the higher probability zone over here, right? So now we can look at this. And one last thing I want to do is just a bit basic time analysis. Wave 5 is often takes the same amount of time as wave 1. So it gives us a bit of an indication on when we should anticipate the end of a wave 5. So now what we have is a really clear picture. Because even though we've made this new high, it doesn't mean that we're out of the woodwork here. I think Polkadot's still got a bit more work to do. So here is what we want to anticipate. And then the other target is going to be around this zone here. Right? 2-3 days, sideways to up, you know, a bit of a pullback here, a wave 4, and then probably a wave 5. Something like this would more than likely occur, right? So what we're going to do next, we haven't got enough information yet because we need a bit more information. But what I was going to do here is this wave 1, wave 2, well, it looks like a wave 1, wave 2. Remembering anything can happen. Is we measure this here, wave 1, and wave 3 is typically 1.618. So you can tell this is a nicely extended wave 3 over here. So that gives us high probability that this is wave 3. A wave 4, typically, if I just delete this, one of the most important ratios for a wave 4, for a pullback, for a breather, is you measure wave 3, low to the high, looks like the top of the wave 3, and 38%, 38.2% to be more accurate, and a maximum of 50 to 62%, right? And the market should not trade in the range of wave 1. So should not trade. This would invalidate the count. If it goes below this point here, it will invalidate the count. More often than not, it will probably just tag this 38%. This is no longer relevant. Retest this high and then make the final surge. All right, so you got an update of Polkadot. But the lesson here is more important than the price of Polkadot. The lesson here is actually we can only go with the information that we have. And if something invalidates our wave count, we just need to reevaluate and stay objective. So what are we anticipating next? So we're going to do a bit of a forecast here. Because a lot of you are asking me, you know, when should I buy and at what price? And a lot of people are saying, from what I'm hearing, let's just say this occurs. Let's just say that occurs. What should we anticipate next? Let's just bring up the theory. We're anticipating this correction here, or this ABC correction here, ABC down. We're still anticipating that. I'm still anticipating that. So we should anticipate a correction, which will normally occur in 3 waves. Nothing's changed in that side of the, opinion of the market. Just get rid of these. I will leave that one there. I'll leave that one. I'll delete that as well. That's what I'm still anticipating, right? And what we should expect doesn't mean it's going to happen, right? This is the name of the game, is we play with the probabilities. If the train leaves the station and we haven't bought and it skyrockets, we go, hey, look, that's life. Let's wait for the next opportunity. Either the same coin with a pullback, or we just look for the next opportunity. And that's just the name of the game. So let's just now look at this. This wave here, more often than not, will break down into a 5-wave sequence. Something like this, right? Won't be exactly like this, but something like this. And a good strategy is, rather than, because I'm hearing some of what you guys are saying, you know, try to set a buy order for here. I see this as a falling knife, which is dangerous, right? Because even though there might be key ratios, key Fibonacci ratios and momentum indicators and support and resistance, etc., it's bad practice to buy, anticipate the market's going to go up whilst it's coming down, right? What is better practice is actually just to put in an order. Once, let's just say this low has been made, is to put an order in on a swing high. So then the order is triggered when the market moves in your direction. That's going to increase the probability of you winning, because often the market might move up and it might move further down, but you haven't been triggered. So then you just move your order, your buy order, to the next swing high, right? And if it does that again, you just don't know what the market's going to do. We have high probability, but let's just say it does this again. And then you go, right, just move my buy order again to this swing high. And then you might get triggered on the third time. Boom. And then you're in the game, right? So let's just summarize. I want to do this video because this is the lesson. Because a lot of people just, it annoys me. They judge themselves too harshly on being right or wrong. Hey, look, we can only focus on the process with the information at hand, right? Even with this, like if we were looking to short Polkadot, we would have probably looked to short at this swing low. But this swing low didn't break, right? We didn't break it. So it's like, okay, well, we just have to wait for the next swing low. And then if we're going long, it'll be the opposite. So the conclusion here, the opinion of the market, keeping in mind that there's a big fat question mark here, big fat question mark, right? We anticipate something like this, a wave 5, of a wave 5, of a wave 1, something like this. But take into account, there's a question mark. Anything can happen still, but this is the high probability outcome. And then if this does occur and we do get this initial move to the downside, then we can do some further analysis. But I would be patient. But look, Polkadot is a beast of a project. You know, crypto is crypto, and some news announcement come out and it can just moon. It can moon and go. You go, look, if you're in it, great. But if you're not, then look, you just wait for the next pullback. But the probability states that we should expect a 3-wave down and then look to buy on a swing high, either the major swing high or the micro swing highs. So there you have it. Polkadot, we have a nice update. It's all about being objective, being mechanical and non-emotional. So if you like today's video, like, subscribe, hit the bell notification. If you want to know how to read the psychology of the markets, take my free Elliot and Fibonacci Masterclass. I'll show you how to do it all, pretty much. It's free. Today we're going to finish on a quote. It is, understand money. This one's from Warren Buffett. I love this rule. It says, rule number 1, never lose money. Rule number 2, never forget rule number 1. There you have it. All right, see you soon.